Lisa? Oh,
Yeah. Oh, yeah. Who's talking?
it was Shannon. I'm just gonna leave and come back and see if I can fix my camera.
Oh, okay. Can you guys hear me okay? If for some reason I cut out, my internet's a little spotty at the moment. It's funny, it's 3 o'clock, I'm up on the mountain, and then skiing stops between 3 and 3:30, and then everybody comes back and then goes on the internet and then eats up all the bandwidth. So what I might do is just take off my camera, and that usually resolves it. But yeah, I'm glad that you're all here. We wanted to talk a little bit about incorporation. So there's a few reasons why you want to incorporate. Let me just tell you, you would be silly to be in private practice and not incorporate. And what it comes down to taxation, and it comes down to money. So basically the idea is that you don't pay tax, right? So when you're a small business, because you have the write-offs, if you write off what you can write off, then essentially it washes out your income. And so you basically pay no tax. So for those of you that are working full-time in the school district and then work with us part-time, even though your accountants say, well, you're not running that much revenue through, they're telling you that, but what they're not considering is the fact is that you have a T4able income.
Oh, weird.
That, on top of that, you're putting in your sole proprietor.
Oops.
Maybe Desiree, mute your camera. Just mute your sound. So what happens is that if you, hypothetically, if let's say you earn $60,000 as a school district, and I hope that's the right amount, or I hope I'm not insulting you, but just say $60,000 working for the school district or for Ministry of Family Development, if you have an agency job. And then you're making, so at 60%, you're paying about 25% tax. That's your tax rate, right? So $60,000 minus 25%. Let me just get my calculator here. 60,000 minus 25%. You're taking home about $45,000. Okay. So now you work at the collective, and maybe you're just working part-time, and you're probably going to make realistically minimum of 30,000. So now you add your 60,000 plus your 30,000 because you're declaring as a sole proprietor. So now you have a total of 90,000. Now your tax rate is 40%. Okay, so the more money you make in Canada, the more that you go and you work hard, the more the government takes because your tax bracket changes. So now that $90,000 that you're bringing in times 40%, you're giving them $36,000 in tax. So 90 minus 36, you're taking home 54,000. So they're taking, so when you come and work at the collective, you're basically working for free. Now, if you were to declare the $60,000 as a T4, because you can't get out of that, right? Because it's an employee salary job, then you're paying the 25%. But the $30,000 that you work at the collective, then you're only going to pay 8%. That's if you don't even have any receipts that you write off. So that 30,000 times 8%, you're only paying $2,400 in tax. So you're taking home most of what you're working at the collective for. Now, that $30,000, if you can write that off with receipts, which because you're a subcontractor, you work at home, you do your notes at home, you do your paperwork at home, you follow up with your clients, you do your research at home, you're emailing your clients from home. So because you're working in your home office outside of the hours that you're at the clinic, you can write off the interest on your house. So the interest on your house, well, let's not talk about the times right now, but typically on an average is you're paying about $20,000 in interest. Okay. Now they don't let you write off the whole 20,000. They let you write off up to 20% as a home office. So any of these expenses I talk about right now times home office is times 20%, but that's still $4,000. So keep in mind now we got the 30,000. Okay. So we got to find ways to write it off. So we found $4,000 in interest. Then you have a homeowner's policy, insurance policy on your house. Say you pay $2,000 a year for that times 20%. Now you've written off another $400. Now, what about the internet that you pay for? That's solely for the business to work. So what do you pay for internet a month? $100 a month. That's times 12 months. There's $1,200. Do you buy coffee and creamer and paper towel and Windex to clean your office? Toilet paper to go to the bathroom? So you go to Costco and you write anything that has to do with your home office, probably spending about $4,000 a year on these supplies for your office. Minus 20%, you're looking at another, what did I say? Calculator. So your Costco bill, there's about $800. Okay, so the idea is, let's just say, let's say you take people out for lunch, or you go to a conference. So let's say in the lunch, you can write off $1,000 a year, whatever receipts when you meet with people. Now you have to have your ECE credits, and you spend $2,000 a year on a conference. The fuel to get to the clinic and back. So your car insurance, your fuel. So they only let you write off a portion of that, but let's just say there's another $2,000 in your vehicle expenses. So right now, if I look at everything that we just talked about, I wrote down for this exercise, I found $11,400 in receipts, and that's not collecting them every day. That's just what's off the top of my head, right? But if you actually go through your wallet every Friday, pull the receipts out, put on a spreadsheet and collect it all, I can guarantee you that you would find at least $30,000 in receipts. So that means that collective money that you take home, you're not going to pay 8% on that. You're going to pay 0. So you're going to take home $30,000. So understandably, yes, when you go to the accountant and they say, oh, they think you're only making $30,000, they're not taking into account the whole picture and looking at you with your T4 income and with your subcontractor income. Now, if you are a subcontractor and you work full-time for the collective, then you absolutely have to incorporate, because you're going to earn $100,000, $120,000 a year. We have some associates right this year that are making about 140. So you don't want to give 45, 50%. When you're at that rate, you're giving up 45 to 50%. So of course you're going to incorporate at 8% minus the receipts that you find. So the other huge reason is because of liability. So if you own a house and you are Ruby sole proprietor. Well, if that person, for whatever reason, if you get sued, they'll sue you personally. So Ruby, you own your house, guess what? They take your house. And that's real. My husband and I have been sued 2 or 3 times in our lifetime across our companies. And if we had not been incorporated, we would have lost our houses. So it's very important, because when they want to sue you, they will sue the incorporation. And if they sued the incorporation, you would just basically declare bankruptcy and shut the company down. They could still go after you, but it'd be really difficult to go after you personally. So it leaves you an arm length away. That's sort of it in a nutshell. I mean, if you wanted to meet with me one-on-one, we could sit down and go through, like, let's look at what your T4 was last year. Let's look at the kind of income that you want to make at the collective. Let's look at the hours, or if you want to increase your hours, you want to make more money as a subcontractor. We could like map it out and we could look at it and we could run some different scenarios. I have like a bunch of calculators that we could do, and then you can make an informed decision. The other thing that I will say is that if you are incorporated, you also don't have to get a WCB number. So right now we're flying under the radar. We actually should all have WCB numbers. But if you're incorporated and you don't have any employees, then you don't have to have a WCB number. So WCB is basically, it's an insurance company. And the idea is that if you are working in the workplace, so let's say you're working in the school district and you slip and fall and basically take time off, and then the WCB is the insurance company. So they pay for your salary. But as somebody working as a counselor, like, you're not going to break your leg working as a counselor, right? Like, to pay WCB or an insurance policy at 3% of all your sales annually, there's no need for it, because you're not going to get in accidents. And if you're at the collective and you fall and break your leg, then we have insurance for that. So if you decide you want to get a WCB number, then you pay 3% on your sales. So let's just say, let's go about the same with that same number, that $30,000 number that you Say you work just part-time, very casually at the collective. So 30,000 a year times 3% is the average WCB rate. So you're paying out $900 every single year to WCB. And the more you work, the more you pay. So if you incorporate, it costs you $1,500, or I think with Steve, because he gives us a 10% discount, it's like $1,400. So if you incorporate, yeah, it is the one-time setup fee, but you're going to offset it because you won't have to have a WCB number. Because down the road, they will come after us. It's just a matter of time. It's not if, it's when. So you want to be off the radar for now. So don't be called WCB and asking for one, because then it's going to open up Pandora's box and they'll go back years and years and years. But if you incorporated that, you save yourself from that because you don't have to have a WCB number. So that $900 that you would pay for WCB, you just put towards incorporating, because incorporation is only once. You only have to pay once. People have this idea that, oh, well, incorporating is so expensive because when you do your taxes at the end of the year, it's more expensive. Yeah, it's a little more expensive. Like, I think I paid $800. That's for the collective. Like a simple incorporated tax return like yours should only be about $500. If you're paying more, then you're getting, that's the wrong word, abused by your accountant. They're ripping you off, right? It's a very simple tax return. So, and certainly you can do it yourself. You can do it through a bookkeeper. You don't have to go through like an official registered accountant. So, and as long as you do your own bookkeeping and are really good, and I can help you, I'll teach you how to keep your receipts. I'll give you a spreadsheet. I'll teach you how to use QuickBooks Online if you want. Like, it's very, very simple what you're doing. Then it takes them 15 minutes to do your tax return, and you don't need financial reports. Right. So it's very, very inexpensive to do it. And the lady across the hall from the collective, she's quite reasonable. She doesn't charge that much. But even if you spend the $500 and then every year you have to like register your company to say it's still alive and it's $200. So let's just say, for argument's sake, it's like $700 because you're incorporating. Those are the costs for you versus the $250 that you would do as a sole proprietor. So it's really not that much more, but you're saving 20 to 30% in tax. It's kind of a no-brainer. But every time I talk to an associate, they say, oh, I went to talk to my accountant, and the accountant or your lawyer or whatever, they don't actually know your business. They don't understand. They're not getting the full picture. Right. And so if you actually ran the numbers, you would see it's in your best interest to incorporate. And they're just giving you the one-off line. The other thing is that most accountants that are small business or small bookkeepers, because you're sole proprietor or just your personal income, they don't do corporate tax. So why would they encourage you to go do and be incorporated? Because they would lose you as a client. It's in their best interest to keep you small. At the end of the day, the proof's in the pudding, and it's down to running the numbers to see, like, what is it going to cost you to incorporate versus what is it going to cost you to not incorporate? And I can guarantee you that it's going to come out in favor to incorporate, especially because you have two jobs. In our country, it doesn't benefit you to make more money. It benefits the Liberal government for you to give them more money. Right? So I'd rather keep that money in my pocket and put it towards growing my business and feeding my kids and buy myself a nicer car. So I think that for one-on-one, it's probably beneficial if you reach out to me and we can actually do an analysis, right? So that you can be more educated. And also, if you want to speak to Magellan Law, they're our accountant. I mean, you can use, they're our lawyer. You can use any lawyer, but he's fantastic. He doesn't charge for a first-time consultation call. He'll spend about an hour with you. And then if you want a referral to our accountants to talk to them, they'll talk with you as well. So I encourage you to do that. And then you can also sit down with me and we can look at, how to do the accounting, how to do the bookkeeping yourself. It's super easy. And like I said, it's just a matter of keeping your receipts. Does anybody have any questions based on I just kind of like spilled out a bunch of information. Does anybody have any specific questions? Go ahead, Loretta.
I was gonna say, when are we allowed to start incorporating? So like I graduate in probably March, but I'm pretty much done my hours now too. So
yeah. Well, that's a very good question. So basically anybody who's new, like moving forward, any new associates that are coming on board, we're actually making it a condition of employment that you incorporate. Because there's too much liability for Marianne and I, because let's say come down the road, WCB comes after us because you didn't pay it, you didn't open up a WCB account, you didn't pay it, they come after me and Marianne. So let's say Marianne and I, let's say hypothetically, we did $2 million of business and nobody had a WCB number. So even though you didn't pay for it because you didn't pay it, they go after us because you work for us. So the risk here, $2 million times 3%. Marianne and I, oh, that can't be right. I think I put too many zeros there. Hold on. 2 million times 3%. So we would be on the hook for $60,000 for this year, and then they'd audit us for like probably many years. So that's like a couple $100,000 they would come after us for. And I have secured, like if they came after that, then they would go after my house because the collective has the collateral is my house, right? So Marianne and I are just like, we can't do this anymore. We have too many associates and we're growing too much. We just can't have the risk of people not setting up their businesses properly. So moving forward, anybody new being hired, it's going to condition of their letter of offer that you will incorporate. So the other thing is sometimes people, they're like, oh, the council like, well, wait till you get to 100,000. Well, then what happens is that now you've registered for a GST number and you have a bank account. And then you have to file that. And then all of a sudden you decide, okay, yeah, now I want to start incorporating. Well, then you have to close out everything with CRA, close out the bank account, close the GST account, and then you need to reopen up all those things under the incorporated name. So from a paperwork point of view, it's a nightmare. Does anybody really want to deal with CRA? Do you want to sit on hold for 3 hours? No. Do you want to go to the bank and change your bank accounts? Like, it's a nightmare. So to your question, Loretta, being an intern, now is the perfect time. Because what we could do is we could set you up with Steve. The exciting part is he sends you the form where you pick your 3 names and you get started on that process. And then you can open up your bank account. So when you start in January and you start seeing clients and you move to the compensation model, then everything is set up. It's going to be super easy for you. The other thing that I would suggest that you also do is if when you think about incorporating, you don't want to be, you don't want to pigeonhole yourself into like Lisa Moore counseling services. You want to leave it more liberal because maybe down the road you want to add different services or you want to branch out, or maybe your husband wants to come and work for you and he wants to put his trade company revenue through your incorporated company. And you want to run your counseling revenue through that incorporated company. Oh, and then your kid decides he's going to do some kind of part-time business and he wants to be part of that corporation. So that's why Crossroads Collective, what are you? It doesn't really describe who we are. So it's very vague, right? My company, my personal company is KLM Enterprises. Enterprises can be anything. So you want to be very broad because your corporation is not, you can have an incorporated name, but you can do business as. Can everyone still hear me? Because I have an unstable connection. So, for example, you could be 123 Incorporated, but on your invoices later on down the road, you could be Loretta Counseling because you're doing business as Loretta Counseling. Right. So it's kind of fun, like a lot of like Nadine, when she set up her company's called Natari Enterprises, and it's all the letters of her kids' children. It's her kids' names combined into that name. My husband and I just set up a new company because we're going to be doing supportive housing, so offering special needs adults housing. And that company is called KMEC Enterprises. So so I have 5 children. K is for Kayla, M is for Madison, E is for Emmeline, C is for Caitlin, K is for Cable. So it means something to us. And some of you have probably seen my little logo. It says KMEC with the little kids with the little. So that's really fun. And it could be something that you set up for yourself and a legacy for your kids, because eventually that shell of a company that you're creating as your counseling business could end up being a trust for your kids. You could buy real estate through it. There's lots of really good purposes once you set up an incorporated company. So it's not just for counseling. You can run lots of different revenue. And as you know, our economy changes, as our lifestyles change, as our kids get older, maybe you will find yourself doing more small business types of services instead of working for a company or BT Ford. And that company can exist forever and ever. And what you do is so in the beginning, you would be a primary shareholder, but you could add people, you could add your kids at a later date. So my incorporated company that we have with KLM Enterprises, that's where we register the chalet at Big White. We bought that in the incorporated company's name. We bought the cottage in the incorporated company's name. So that because I could support that with the counseling revenue that I do, right? So the counseling revenue, when you go to apply to bank, Being incorporated actually allows you to also have more lines of credit. So you've got your Lisa Moore line of credit, my personal line of credit, but then as you build your business and you run revenue through the incorporated company, then you can apply for a loan for an incorporated company. So KLM Enterprises has a line of credit, right? So then it allows you to borrow more money when you want to buy things or have more assets. And so, for example, the reason why we put the chalet and the cottage in the KLM Enterprises name is so down the road, when I die, I will the company to my children, because those assets are owned by the company. So I just give them the company and they have the assets. So that's where Steve from Magellan Law, he's taught us to do a lot of really good things. He saved me a lot of money. And, you know, in being creative and honest, like I don't lie, I declare everything, but my husband and I pay very, very little tax. The other thing that's important is, especially those of you who have kids, and especially those of you who have special needs kids, so when you have a lower income, so when you have a lower T4 income, then your child tax benefit credit is higher, your GST credit is higher. If you want to apply for, say, a CKNW or Variety Club funding, then your income is higher. If you don't want to pay back your student loan, then you don't have much income, so your student loan income is lower. So when you go to apply, when you go to submit your taxes, you know, if you work for the school district, you're going to do your $60,000 T4 and you're going to get your child tax benefit based on that. Okay. So for me, when I do my personal taxes, KLM Enterprises pays me maybe $30,000. So by paying me only $30,000 out of the company, the rest stays in the company as an investment and write-offs and expenses and stuff. But then that $30,000 allows me to get full child tax credit benefit. And it's because we have special needs kids, that's really important, because then I can apply for different charities. We get authorization for other special needs subsidy. Even sports grants, like we get eligible for that. The athletes for kids, we get the $500 for each kid. So for those of you who are younger, who are thinking about having kids, you want to have a lower income. And even if you didn't work in the school district and you just say you work full time. So for example, let's say you work for the collective and you make $100,000. Okay. So then out of that $100,000, you found $60,000 of receipts. Okay. So now your income is only $40,000. So then you only pay yourself, you T4 yourself from the company, the $40,000. And then you only pay tax on the $40,000. And that makes you eligible for the child tax. You know, you get a larger amount for the child tax credit and you get more GST and that sort of thing. And maybe you get CERBs. You know what I mean? Like, who knows what's coming down the pipeline, but those government agency, you'll be eligible for. Does that make sense? Or am I confusing anyone? Am I making it clear as mud?
I have a question, Lisa.
Yeah.
Mind you, I don't have a lot of details around it. So I did have a conversation with my accountant once, but it was very brief and it was the end of a different conversation. And I said to him, I'm wondering if I should incorporate. And he just really quickly sort of said to me, well, the income that you're making from the counseling, because it's not my main income.
Yeah.
He said the income that you make from your counseling, do you need it to live or can you put it away? And I said, I got 4 kids. I need it to live.
Yeah.
And he said, it doesn't make sense to incorporate until that money you can put away and invest. Because he said, as soon as you start taking that money out, you get taxed at your regular rate. It's only when you have it invested and then you take it out later or something like that. But
well,
like
you do get taxed, Crystal.
Conversation.
Yeah. You do get taxed, but you get taxed at a lower rate.
Yeah, that's not how he made it sound. So that's why I'm very confused.
Well, then what I would suggest that you do, okay, why don't we do it right now? I'm gonna, hold on, just for fun. So I'm just looking up the one I usually use. Let's see why. Sorry. Okay, I'm gonna go back to share screen here.
It's okay.
Sorry to interrupt. I have another meeting at 3:30, so I'm gonna log off, but thanks, Lisa.
Yeah, and I'll send you the recording. Thanks, Rubina. Okay, so do you guys see this taxable income? So you don't have to share the truth, but just throw out a number for me, Crystal, of what you would think you make at your full-time gig right now.
Almost 100 grand.
Okay. So you're going to pay out, it's even more than that, tax after tax income. I got to move this. Okay, so your tax rate you can see is at 25%, but that's for BC. That's not your federal tax. Hold on one second.
Okay.
Okay, hold on. I'm just going to pull up a different website. I think I found one yesterday. Here it is. Okay, share screen again. I probably could have done it. I just don't know how to do it that great. Okay. All right, here we go. So your employment income, we'll say, it's going to ask you the territory. That's what I'm missing here. So you're making 100,000. So, and then you're going to put in, say the collective, let's just say you did 30 a year. Okay. So you're paying, so you're paying $37,000 to the government, and you're going to take home 92%, and your marginal tax rate is at 40%. Okay. So let's change the numbers now. Let's take out this $30,000 and let's see how it changes it. Oh, I did that too fast. I can't even see. It did change it, but. So you went from total 92,000 down to 74. So 92,000 minus 74. Minus 74,000. I'm sure so you guys are doing this in your head, is 18,000. So that's 18,000 that you would be able to take home as more money, because that $30,000 that you would make at Crossroads Collective, you would be able to find enough receipts to write that off. Or even if you got it down from 30 down to 10, then you would pay 8% on 10,000. So you're still going to take home more than 15,000 that you're going to save. And that money goes right in your pocket. So I would encourage you, this is this Wealthsimple website. I just typed in Income Tax Calculator Canada, and then use the tax rate for incorporated company of about 8%. But I would encourage you, like, even just think about, I don't know how good some of you are at keeping like receipts, or some people just like to keep the receipts through the whole year. And so if you were able to go through all your receipts and look at how much you paid in mortgage interest, house insurance, your fuel for your car lease, because you can write off the entire lease. If you own it, you can only write off a portion, but if you have a lease, ICBC policy, the different supplies that you buy around the house, cleaning supplies, toiletries, and paper, pens, office supplies, computer. Add all those receipts up and see how much you actually spend running your business when you're working from home, doing your private practice. Take that money off of the income that and if you want me to run a report about what you actually earned at the collective this year, I can send you a report. And then you can actually do the calculation yourself and see if it's worthwhile. But at the end of the day, after I said everything that I said, whether it be the money that you save, the WCB, the most important thing is the liability that you're putting yourself in if you don't incorporate and somebody sues you and you lose everything that you've worked your whole life for. Because that's possible. Especially for some of you work in high risk with high risk clients, like suicide ideation, eating disorders, right? Even the fact that we went through COVID and all the mental health and the people who are a lot sicker, I think we could all agree that people are sicker in general in terms of mental health, and we see more suicides. So it's a real risk that one of these days we will get sued, especially if you're younger. Those of you that are just starting your career, it makes sense to do it now. Because you're going to be working in this industry for a long, long time. So I'm happy to run those scenarios. If you're not comfortable or confident just running like numbers and math, that's my gig, right? That's a service that we provide as part of the collective, right? That's the business acumen side. I'm happy to sit down with you one-on-one, whether it be in person or on Zoom, if you feel comfortable disclosing some of your personal financial information. And then I can like work with you one-on-one and we can actually run real life scenarios. And then I also would encourage you, again, it costs you nothing. You can reach out to Steve from Magellan Law and have a conversation with him and make some informed decisions. And I would also say, you know, like the accountants don't know your business and they don't know your life. They just spit off like an answer, right? Because it's easy for them. But if you look at it, when we look at it from our counseling perspective, when we look at it being client person-centered, did that accountant really give you good advice based on what he knows of your current situation in your entire life? Probably not. And is it to his advantage to suggest you incorporate? Probably not, because he would lose you as a client because he doesn't want to do incorporation tax. So I made a joke to Leanne because Leanne has to incorporate, and I'm being facetious here. I worked very, very hard in my life. I've made a lot of risky decisions. I made a lot of money in real estate, but I wouldn't be as successful as I am. I'm telling you, I would not be as successful as I am if I did not incorporate. Because all that money that I saved, I was able to put back into my savings, put back into like real estate loans, which I made money on real estate, flipping real estate. So I would absolutely have to say that the day that I incorporated was the day my career and my financial status went like this. So, you know, when you hear I'm at the cottage or you hear I'm at the chalet, that's because I worked really, really hard, but I also made very good financial decisions. And I took risks. Right? So maybe this incorporation for you is for you a big risk. And I get that. But the only things in life that you regret are the risks you do not take. That's my motto. So, but it's a big decision. It's a big financial decision, right? And, you know, so I'm happy and think on it. I'll send you the video link to all of you. Maybe you want to play for your husbands, your spouses, because they're involved and they're going to have questions. And then if you want to follow up with me one-on-one, like I said, we can read through some scenarios and I can give you some more advice and just talk with you about your personal situation. And then for those of you who are interns that are listening to this, and as we said, moving forward, or new interns that we're hiring, we will be asking you to incorporate. It'll just be a condition of our employment. Go ahead, Loretta.
I just have a question. Is this also related to getting a GST number? Is that part of this too?
So regardless of whether you are incorporated or not, once you hit the $30,000, you have to have a GST number. And it's a very good question, because why would they say don't get a GST number until you get to 30,000? And I'm gonna tell you why. CRA doesn't do anything for your best interest. It's their best interest. So the reason why they say, as a sole proprietor or a person, whether you're incorporated or not, you still have to get a GST number once you hit 32,000. Well, you know why? Because paying GST, the whole GST program is set up so that when you pay GST, if you collect GST, it washes itself out. Okay. So as long as you're charging your clients GST, then, so let's say you charge in a year, you charge your clients, you take on your bills, you put the 5% on and you collect $500. Okay. If you pay GST on your Tim Hortons receipt, on the laptop that you bought, on the milk that you bought, on the paper that you bought, on those receipts, all the GST that you pay, you get to write off up to $500 because you collected $500, so you can write off $500. Now, why would the government not want you to have a GST number until you hit 32,000? Because the first year of your business is the year you spend the most amount of stuff to set up your business. You're going to buy the desk. You're going to buy the computer. You're going to invest in all these courses. You're going to buy all the supplies for your office. So by them saying to you, don't get a GST number, that's because they don't want to pay you your $500. It's not to their advantage for you to get a GST number right away. Not until after you spent all the money and they've collected the GST on everything you spent, and they're not going to give it back to you. They say, wait till you have 30,000 in income. This is my mastermind. This is the ADHD or my ASD, right? This is the stuff that I figure out at night, right? I'm like, that. Well, I stood up in bed one night. I was like, that's why they do it. Because it's not to your advantage, it's to their advantage for you not to set up a GST. And then once you are getting the 32,000, then it is to their advantage because they want to get all that tax money they can. Go ahead, Shannon.
Yeah, so I'm fairly new and I won't be starting till January. So I'm a very, very new intern. Would it be, sorry, would it be a benefit to me to do it soon or shall I just wait a little bit?
I would wait. I would say like
I don't have
kind of like
much yet.
Loretta. So Loretta started in May and it's December and she wants to start, seeing clients in January. It only takes like a month to set up. The longer part is actually getting to the bank, making an appointment and actually, the bank actually calling you back and then making an appointment and then getting in there and then them actually, doing the paperwork. And then, you have to call them 3 times to get it fixed. The longest part is actually setting up the bank account. I would give yourself maybe like 2 or 3 months before you're actually going to be working and collecting a paycheck. The other option too is, let's say Loretta, let's just say it takes a little longer, it's Christmas and stuff. Then what we would do is we would just hold your compensation report. Like there would be no point in issuing you a check and then you're to a company and then redo all the bank automatic deposit and redo all the QuickBooks receipts and stuff for your business. We'll just hold off a couple of weeks. So, but definitely, I mean, if you met with Steve in the next like week or two and he could get started and the longest part is actually you coming up with 3 names to submit. But yeah, I would definitely do it now soon, Loretta.
One more quick question, not really related to this, but you mentioned ECE credits and you mentioned them last night too. What are those?
Oh, sorry, I'm using acronyms. They're called maybe they're CE credit. Anyway, they're education credits is basically. They're called different things in different industries. Psychologists, they call it a little bit different. But basically, when you get your CCPA or your CCC designation, you have to do say it's like 30 hours within 3 years or something. I think that's off. Maybe that's 90 hours. Anyway, whatever. You have to do so many hours of education. Ooh, hold on, my battery's right. So in order to keep your registration, you have to attend workshops and so let's say you wanted to do your EMDR training. Well, EMDR training is usually about $2,000 or $3,000. So you're spending money. So that would be a receipt that you could write off on your income because you had to spend that money to take that course. Or for example, when Marianne and I just went to Las Vegas and we bought our plane ticket and we went to the workshop and we had to stay in a hotel, then that is all write-offable. So basically it's a company expense. So we spend it personally and then the company reimburses us. So that's so again, say you made $30,000 incorporated, right? So you have $30,000 in revenue. And then you went and paid the conference for $2,000 air flight and hotel and whatever. So say your bill was to go to that conference was $5,000. Well, now your $30,000 in income goes down to $25,000 because you wrote off $5,000 just going to one conference. And ECE credits are really important because it's basically you keeping your registration and your credentialing up to date and keeping up with whatever is happening in our industry. So it's just learning. We never stop learning even after you finally get your dogwood. Not your dogwood, your certificate, right? When you finish and you walk the stage. Okay, well, we lost a few people, so I'll send you guys the video. If you have any other questions, you want to reach out. I know Loretta, the email's coming for Steve's email, right? But yeah, feel free. We're in a public forum and it also is being recorded, so I can appreciate that you don't want to disclose personal information. So yeah, if you want to just sit with me and reach out. Oh, there was a chat here. I didn't see any of it. Oh, okay, Crystal. So you are correct. I actually had a long conversation with our accountant. You guys are a bit of an enigma. So you're right. You don't have to have a GST number, but you're doing yourself a disservice by not having it because now you can't write off all of your expenses and collect all that GST back.
Yeah, I don't think I could have a number though if I'm not charging it. I don't think they would let me do that.
Well, you could charge it if you wanted to.
I'm not supposed to though, because I think that as social workers, we fall under the category of paramedicals, which is why
You
people
do.
can claim our services on their medical section of their income taxes.
I mean, I think you're right. You'd have to look at the legalities of whether you can or cannot. And all of this, even in terms of us, might go away because with the new regulatory changes that are happening for us, that is the whole idea, is that even as counselors, we
It
shouldn't be
might.
charging.
Yeah, for sure. And I actually keep thinking to mention to you guys, as I'm becoming more and more aware of this stuff in private practice, is that I think that you guys are charging it for me when I see people, and I don't know that you guys should be.
Well, then that's just a mistake when we originally came on board, because the other social workers, there's no GST on it. So I'll just make a note to
Yeah.
follow up with Leanne. It's just the way it was set up in Jane.
Yeah, for
I'll
sure.
get that corrected for you.
Okay, great.
Yeah, because you don't want anybody calling you a regulatory body and saying you're charging GST, and you don't want to, get involved in any of that, right? You want to keep your license.
Yeah, totally. I do.
All right, thanks for bringing that to my attention.
Yeah, thank you.
Okay, if anybody else doesn't have any questions, I'll let you guys go. I'll send you the video, and please do not forward this video to anybody outside of our organization for any reason. Obviously, I disclose personal information about myself. I don't need CRA knocking on my door. or having my bank account shut down because whatever, I said something I shouldn't have, right? All right, you guys have a great day. Thanks for coming on board, and you're all just such a joy to work with. Have any questions, just follow up with me. Okay, bye.